You're both global issuers. When you pick a currency for raising debt in, is it all about funding costs for you, or are you trying to balance that with diversification?
Good afternoon, everyone. Thank you very much for welcoming us on the panel. And to answer your questions, it's a mix of both. We would very much look at investor diversification at all points in time because it's key for us. It enables us to access every market at any point in time and never face market closure. Cost is also something we keep at the forefront of our mind when accessing different markets, because obviously we will have to, this will impact the lending side of our business. We always want to be very competitive on the lending side, hence we need to be competitive on the funding side. So it both goes hand in hand. The more diversified we are, the more competitive we are in terms of pricing as well.
How about you, Cindy?
So yeah, first of all, thank you very much to Bloomberg and to the National Bank of Canada for welcoming BNG on this panel. When it comes to currencies, you know, BNG is a Dutch public sector bank. We serve clients in the Dutch public sector, so they are asking for euro loans. But of course, given that we don't have any retail clients, it's very important to us to have strategic access to the money and capital markets across the globe. So euros and dollars are our primary currencies in which we have a commitment to maintain our benchmark funding curves. But of course, we are also active in other currencies like Canadian dollars and also sterling and Swiss francs, to name a few. And those are also important sources of diversification for us. Now, just as Anne mentioned, for us it's also important what the price is, because only if we can get the most attractive funding, we can give our clients the best financing available. But of course, getting the strategic access sometimes means that you have to pay up a little bit to maintain good access to different capital markets and have good relationships with the investors.
So how much would you say, how many basis points would you give up to maintain that relationship in general? How does that calculation take place?
Would you want me to take that question? I can definitely. We don't think exactly that way. We tend not to so much view as a payer. We look at markets in different silos. So we've got our benchmark markets, which are obviously very traditional. We're not very innovative in that front. It's euros, dollars, and euros. And then we would have what we call strategic markets, which are sterling dollars, Canadian dollar, and Australian dollar. We're calling them strategic markets because they're actually providing us with a strong investor diversification. And because we tend to see in these markets investors we don't see elsewhere. For these markets, we would want flat-ish to what we can get in our benchmark markets. That said, if it's within a couple of basis points, we can have some flex, but it's not written in stone. It's very much a moment decision. It's depending on how it's very much depending on the type of investors and that are behind the transaction. I'm going to give you the example of our Canadian transaction a few years back. It was very much because it was an ESG demand on the back of that, driving that transaction, and that's essential to us. Hence why we could show some, we could show some flex in such instances.
Is that the same for you, Cindy?
I think very comparable in the sense that you have to think strategically about these decisions, because of course, if we want to help our clients make social impact, they can only do so at the most attractive financing terms. When it comes to a specific decision, it will depend on whether we think that a transaction will give us better access to that market. maybe in the near to medium term as well, where we might be able to do further taps of the new line that we create at levels that make sense to us.
It's been a few years since you've been in the Canadian market. What conditions are you looking for to come back? Maybe start with you, Sini.
Yeah, so indeed, unfortunately, it has been 3 years now since we have been active in the Canadian market. Of course, that doesn't mean that we haven't been active with our Canadian investor base over that period, because we have been in Canada every year and we have done investor work. And fortunately, our Canadian investors are also very active buyers of our paper in, for example, euros and dollars as well. Now, we certainly hope to be able to be more active in Canadian dollars going forward. But unfortunately, the cross-currency basis has made it on the expensive side, I would say, over the last number of years. So we'd certainly look for that to be within shooting range of euros, which would be the benchmark for us.
Anne?
And yeah, I was going to say, I can only echo what Sid is saying. We look at the market the same way. So we're never very far, ever, from the Canadian investors, in the sense that we meet them at European conferences, or we meet them in Canada or in the US. So we are in regular touch with them. So we tend to see some of them in our international in our benchmarks, but we are very much monitoring the markets with the help of our Canadian banks, mostly to see whether there's an opportunity for us to come back on the maple market. But I would have to be closer to not as big a gap.
You both sell a lot of ESG label bonds. What is your perspective on Canadian investors' attitude toward ESG compared with elsewhere? Maybe start with you, Anne.
Yeah, you know what? I have to say that I've always considered the Canadian investors quite sophisticated in that front, be it by construction and who they are and the country that they live in, but they were very much into green. And when it comes to social as well, because we do issue social bonds, it was when we met with investors on that front, be it virtually or physically, they were very sophisticated, very key questions. And you're talking about some of the Canadian bank treasuries or else, very well advanced. And we have to say, a few years back, when we then went to see some US investors, the difference was really major between the two investor types. Now the gap has narrowed, but still, I have to say that's something we wouldn't really think, issuing a Canadian bond without a label, because we know there's a strong demand there, or at least there was a strong demand there for specific label bonds.
Yeah, definitely agree on that. So our understanding has always been that issuing a bond in Canadian dollars should mean that you also put a label on it, given that demand from Canadian investors in that regard is very strong. Now, we've also been in active discussions with Canadian investors on, for example, social housing, which in the Netherlands is an important topic for society, and it also has a political angle as well. I think a lot of the discussion around immigration, cost of living is very much related to housing affordability, and BNG is trying its best to help our social housing association clients in the Netherlands to provide social housing to low-income households. And our understanding is also that in Canada, this topic is very much relevant, and that social housing is also definitely something that Canadian investors want to invest in.
Can you give me a sense of how much it costs to put an ESG label on a bond, and are you usually able to pass that through onto the investor?
If I may take that question, I would say that the famous gradium that we could call social when it comes to social bonds no, you don't pay up to, at least to buy our social inclusion bond, because we decided. The only reason why it may come more expensive is because there's more demand and there's then more tightening afterwards. But there's no decision from the issuer to actually have a social bond more expensive than its equivalent in conventional format.
But it is more expensive to issue because of the tracking and reporting process, or no?
Not on our side, especially given that we are working under a portfolio approach, so it's based on our portfolio. And remember as well that we are a social issuer altogether. So it's true that our social inclusion bonds are to finance projects in 4 of the 10 sectors we are active in, but nevertheless, we monitor all our projects. We just put the projects that are part of the portfolio of the social inclusion bond portfolio into one side. But it's a little bit of more work indeed with all the reporting and stuff. But it's not passed on to the investor. It's actually borne by us.
That's what I figured.
And really very much part of our day-to-day business because we really want that market to grow.
What's your perspective?
Well, so I would say, looking at costs on the issuer side, obviously we make impact reporting available for our ESG bonds, both our sustainability bonds and our social bonds, on an annual basis. The transparency that we provide here, that we want to give our investors, I think it's very valuable. Obviously, that does come at some administrative costs, but I think that's happily borne by us as an issuer, because not only do we want to be active in ESG labeled bonds, but we also think it's very valuable to our investors and to the relationships that we have with them. When it comes to the bonds themselves, just like Anne, we don't typically see much of a premium. It's hard to measure it either way. You would really have to issue a non-labeled bond next to a labeled bond in the same maturity on the same day, I would say. But what we do indeed see is an increased amount of orders and also larger orders, leading to stronger demand. And we have had the feedback many times from investors that liquidity, certainly when you're looking to sell the bond, is very strong for our ESG labeled bonds.
How can the Canadian market, or any market for that matter, become more international, more diverse, and less insular? And what's the argument for being that way?
Yeah, so maybe if I could just provide some thoughts on that first, then I would say the Canadian market has certainly become more international over the years. If we look at other examples of markets that have done so, if we look, for example, at the Australian dollar market, then we see that many issuers have come to that market, not just from Europe, but also from Canada in recent years. And also vice versa, right? So we're now seeing the Australian semis coming to Europe, issuing benchmark transactions in euro. And I think this cross-pollination, if you will, only helps to internationalize a market. And we've certainly seen that with the increases in order book sizes over the years in Australian dollars. Now, that's not to say that we don't also see internationalization in the Canadian dollar market. But I think it definitely helps if the market circumstances are such that issuers are able to issue on a consistent basis in the Canadian dollar market, and Canadian dollar issuers, which they have been, are active abroad as well.
I can only echo Sydney. I think the one line, if Canadian issuers can issue internationally, that would put some positive tension on the cross currency, and that would help us. So that it would be more interesting for us to issue in Canadian dollars. But half a joke aside, I think that's very much that's a very much a dual way, dual way road. Everybody has to be to be active, and not only the international issues, also because the market needs to grow a little bit to be able to welcome all the international issues. Also, it has, I mean, I don't know about you, Sydney. I know that the investors investing in international issues are, for the moment, not that many. The difference with Australian market that you just mentioned is that now you've got a larger group, even of domestic investors investing. So I think that has to grow, and for that they need to be happy to pay at least flat $2 and not expecting a pickup $2.
Are
I
you
think
looking?
indeed, just maybe to reflect on that. What we definitely have seen is a very international buyer base as well, investor base for these Australian dollar transactions, whereas perhaps in Canadian dollars, the buyer base that we have seen for our transactions in the past was more on the domestic side. So when that also grows into a very much international audience, that definitely helps to deepen and broaden the demand for new bonds.
Are you looking at new currencies and markets for opportunistic issuances?
So I may take that one. Indeed, we always are, in the sense that, as I said in my first sentence, we always, at the opening remarks, we always want to diversify as much as we can, markets and diversification, to be able to get the best of the markets in terms of pricing and investor diversification. So we would look at every new bucket of demand, new product. So that includes SOFR FRN, that includes different currencies, and we have been discussing rupee, in the Indian rupee and Mexican peso, new currencies to our toolkit. So we are always open to new products and new currencies.
Is the rupee attractive to you too, Sydney? Well, it's not something that we have issued in, recently or at all. But we certainly also keep an eye out for interesting opportunities to broaden our toolkit, as Anne put very well. So certainly looking at various currencies, but also types of bonds, such as being active in callable non-euro bonds is something that we're currently looking at, which I think would be a great addition to our issuance spectrum. You're both highly rated issuers. Are you seeing a flight to safety from investors, and are you benefiting from that?
Oh, yes. I have witnessed that investors, it's an ongoing trend, but it's growing trend, that investors are, for some obvious reasons, probably turning their back to some of the govies. I won't quote France, but it might be that they've got an issue with the credit right now, or maybe the US or any, they want to be, from what they say, want to be less exposed to govies and probably want to go into more safe haven. And we are, to their words, I'm not pretentious enough to say that for myself, but we are more of a stable credit. And less subject to political turmoils and geopolitical tensions. So we do see some flight to quality. We do see some investors reducing their investment universe, and we're still part of it. And we get a lot of requests to get some taps or private placements, knowing that we're quite well advanced and won't do a benchmark before year end.
Oh, how much reverse inquiry are you seeing at BNG?
Oh, no, I'm going to leave that to you, Sydney.
Yep, sorry, and that was for you, sorry.
Certainly BNG is also typically being an institution that can be qualified as a safe haven due to the strong link with the Dutch sovereign, which very much also is a safe haven, given its 45% debt to GDP, quite an exceptional number in, I would say, these times where we see debt to GDP ratios go up due to increases in defense spending and other additional expenditures. We see as BNG quite a bit of safe haven demand when markets are stressed, especially on the shorter end, on the not just on the shorter bonds, but also on the commercial paper side as well.
Well, thank you both very much for joining me, and thank you.
Thank you very much.
Thank you for having us.